Welcome to the 401k Audit CPA Success Show, where we're 100% focused on helping companies across the United States prepare for their 401k audit. If you have 100 eligible participants in your 401k plan, then this podcast is for you.
Welcome, everyone. My name is Kim Moore. I'm the audit director here at Summit, which is a division of Anders CPAs and advisors. I have Karen Hill with me today. She's the audit manager on our team, and I'm the audit director. Our team pretty much focuses almost exclusively on 401k plan audits. So hopefully you joined us today, maybe because you need a 401k plan audit, you just found out you need one, or maybe you're looking to see if there are other auditor options out there if you've had a 401k plan audit before. Today's podcast, we're going to talk about what happens if you just found out you need a 401k plan audit. We thought this topic would be timely because usually folks that have not had an audit before, they find out usually around between the February and April timeframe from their record keeper or TPA. They're going to get a notification that they've gone over the limit. We're going to talk about that here in a minute, but that they qualify now for a 401k plan audit. So we thought this would be a good timely topic, given that a lot of folks may be running into this here over the next few months. So that's where we're going to kind of spend our time today. Some of this we've talked on previous podcasts, and we've certainly done blog posts about this as well. But we thought good timely topic, given that this is going to be coming up. Let me also throw out at the beginning here my email address. It's the letter K, then Moore, M-O-O-R-E, at anderscpa.com. Feel free to email me, and I'll throw that out at the end of the podcast too, but feel free to email me if you have any questions or you have interest in this area, or if you have a suggestion for a future podcast. We'd always like to hear from our listeners and discuss topics that would be of interest to you. So with that, we're going to get started. So Karen, I'm a plan sponsor. I've just been running my audit, or I'm running my 401k plan. Everything's fine going along. And what might cause me to need an audit?
Well, first you need to, it's based on the number of eligible participants. And that has to be as of the beginning of the plan year. So for calendar plan years that end December 31st, you would look at January 1st data for that year. It's 100 more eligible participants. What eligible means, and it's not people who are just deferring. It's those that are deferring, those that are terminated and are still in the plan, and those that are eligible but not participating in the plan. So it encompasses all of those people. You might want to check with your TPA to see if you have one, but generally also, I'm going to backtrack a little bit. On this 100 participants, there is an 80-20 rule, basically, and the 80 part you might need to help me with a little bit, Kim, but I know if you filed a short form in the past and have continued to file a short form, you can continue to file that short form, which means you don't need an audit until you go over 120 participants. And this is so you're not bouncing between an audit and not an audit, every single year. I believe with the 80, and you'll have to correct me if I'm wrong, because I haven't seen this quite as much, is if you did have an audit and you go under the 100, you should wait till you get below 80 to stop.
Right. That's what the rules say, and I mean, you're absolutely right. It's meant so that people aren't bouncing back and forth, because you could envision a business that has a lot of turnover, and just because it's measured on that first day, you could have a fluctuation of 20, 30 employees between a couple of days, especially if you hire a lot. A lot of companies like to hire people at the very beginning of the year. So it just the way it works, it could cause a lot of fluctuation. So yeah, that's the way it's supposed to work, is that if you're between the 100 and 120, if you filed a short form last year and didn't need an audit, you can keep doing that until you go over the 120. Conversely, if you did an audit last year, so you were over that limit in the prior year, and all of a sudden you drop down you're supposed to continue doing an audit until you get below the 80 participants. What we tend to see though is the first part is crucial. You don't want someone doing an audit when they have 115 if they don't need to. But typically once people drop below 100, then they don't do the audits anymore.
Yeah.
But it's really meant so you don't bounce back and
Right,
forth.
right.
So that if 1 year you had, maybe you did a layoff but you're going to bring them right back, they don't want you like laying off people on January 1st so you don't need an audit and you hire them all back January 2nd. That's, I don't know why anybody would do that. That would be crazy, but that's the intent of what the rule is for. So yeah, so it's all based on eligible people. It is based on January 1st or the first day of the plan year, as Karen mentioned. So we get people that they say, well, January 3rd, I didn't have that many people. It doesn't matter. It doesn't matter what happens later in the year. Unfortunately, it's all based on January 1st because we have people all the time that will come back and maybe they're terminating the plan and they terminate the plan in February. Well, if you had over that 100 or 120 on January 1st,
Yeah.
You still have to have the audit, even though it's only going to cover maybe a couple of months. And we mentioned that it's the first day of the plan year. So if your plan year is not a calendar year, it isn't January to December, obviously you'd have to adjust for whatever your plan year is. And the other thing I would just say is this isn't optional. It isn't, we kind of talk about, oh, you get to have an audit now, but I mean, you have to have an audit now. The DOL does checks. When you file your 5500, it goes into a system called eFast, which is obviously an automated system, and they will run checks against eFast after the major deadlines, and they look for plans that fit into what we just talked about and don't have an audit. And they will send you, they started this last year sending an email notice saying, hey, we noticed that you were due to have an audit and we didn't see an audit report attached. But eventually, if you don't respond to that or you don't get the audit completed, there you're going to get, we like to call them nasty grams from the DOL. But I mean, it's an official letter. It'll be certified and it'll say, you didn't complete your audit. You have 45 days to fix that. And then after that, if it's not completed in those 45 days, then within 30 days, they will send you a penalty letter. So you have a little bit of time, but not a lot. I mean, that wouldn't, if you had not even obtained an auditor and you got to that point, you're going to have a tough time, securing an auditor and getting through, especially a first-time audit. So don't look at this as, well, I can put it off and when I get to it, don't look at it that way because that could cost you a lot of money to do that. So if I hit this amount of participants, and so now I need an auditor, very first thing you should probably try and do is find an auditor. I mean, that just kind of makes sense. And we suggest that you start as early as you can for a couple of reasons. One, you want to leave yourself time to do some due diligence about the auditors. We're going to talk about that next. So what kinds of things should you consider? But also, you want to leave yourself time, depending on when you're doing this. Audit firms do a variety of types of audits. They may only have a short time that they can fit 401k audits in, and they only have so many staff. They can't expand their staff really quickly. So you might call around several places and they don't have any room on their schedule for you. So the earlier you start, obviously it gives you longer to find people, but it also gives you more bandwidth that if you need to call 10 before you find somebody, you have the opportunity to be able to reach out. The later you get in the year, the harder it's going to be to find anybody that can do the audit, let alone one that meets the criteria that we're going to talk about next. So I would definitely encourage you start early.
Plus, the earlier that you start, the earlier you can get on their schedule and maybe be able to more easily align up their schedule with yours, what works with you. Because if you call later and they can only do it, if they're a brick and mortar CPA firm is going to come out, which is one of the things we'll talk about later. But if they're going to come out to your site and the only week that they can do it is a week that you have vacation because you waited.
Yeah.
So
yeah, you're probably not going on vacation. That's probably what's going to happen.
You're going
to have to find somebody to cover
or something.
Yeah.
So yes, that's the other reason to do it is because the earlier you get on their schedule, that you get in their ear and they have more room on their schedule, the easier it'll be to align your schedules up.
Mhm. Yeah, and I know from past experience here when we get new clients, if we get them earlier, I mean, you can imagine the first time audit, the auditor is new, plus you don't know the process, and there's a lot to go through that first year that you won't the second, third, fourth year, you don't have to go through all of that. But that first year, there's a lot to it, and you want to leave plenty of time to work through all these things because you don't know what kind of documentation you're going to need. You may have to search through things. So it just behooves you to start early. This is not something you want to mess around with because the fines can be pretty hefty. So definitely get started. So I've listened to your advice, and I need an audit, and I need to go find an auditor. So, what kinds of things should I think about as I'm out here searching for audit
So you want to
firms?
know what kind of experience they have, what kind of audits do they do, what experience do they have with employee benefit plan audits, how many of them do they do, what types do they do? Because if you have a 401k plan, and usually if they do other kinds of benefit plans, they're going to have experience with 401k plans. But you want to make sure that if you have maybe you have something else that's different. Maybe you have the 401k and you have something else that also needs to be audited. Make sure they have experience with that as well. Um, you want to ask how many because you want to make sure that they understand all those idiosyncrasies that come along with the audits of the employee benefit plans. There's I can tell you from working from different firms, I've worked for larger firms that did fewer plans. And just the more that you're doing a 401k plan, the auditor just understands the different things that are going on. How many years experience do they have with the plans, auditing plans? What percentage of their work is employee benefit plans? For a lot of firms, it's a very, very small percent of their work. Um, so you're not sure how much of a priority that will make your audit. Um, and you also want to know who's going to actually work on the audit. What's the staff going to look at? Like, is there going to be one person coming out? Will there be 2 or 3 people coming out to your location? How much experience do they have? The AICPA also, they have a portion on their website. They have it's actually I'm not sure exactly what to call it, so you can help me maybe with that. But it's employee,
It's a voluntary
yeah,
group
employee benefit.
that specializes
Yes,
in benefit plan
employee
audit.
benefit plan audit quality center. So you want to know if they're a member of that because the center, it does a lot of it can give you sample documentation, sample work papers, lets you know when there's changes that have occurred, and helps the auditor best document this. Make sure that the auditor is doing what they need to do. So if they're a member, how do they use the information on there? Do they read the information? I mean, there are some firms I'm sure out there that are members to say that they're members and then don't ever look at at any of the information that's out
Yeah,
there.
I'm sure there probably is.
And then you also,
And also
yeah, I was going to
training.
get to that next.
There's a lot of training. Oh, okay. There's a lot of training they provide.
Well, I
So
was going to say that was a question you want to ask is how much training do the staff have? Now, it is required the partners have I believe it's 8 hours every year, but
hmm
there's no other requirement for the staff on there. But a lot of firms like our firm, we have everybody on our staff usually gets at least 20 hours of training on employee benefit plans every single year. So you want to know, I mean, that's probably excessive, but if everybody you want to make sure that the staff that's going to be working is trained in some way on employee benefit plans because things are very, very,
Yeah.
they're different.
hmm Yeah, the benefit plan, I mean, I think a lot of people will call around and say, do you have audit experience? Do you have auditors? Do you
Hmm.
do audits? That kind of thing. And there's a lot of different kinds of audits. If you don't work in this space, to you an audit's probably an
Hmm.
audit, but they're not all the
No.
same. And this is a very technical, regulated area. And it's important that your auditor understands all of those nuances in the benefit plan space versus just a generalist auditor. It's not to say that auditor is not good. I mean, and they know the rules, but they don't know the specifics for a benefit plan. And we always, this is funny, when we go to those conferences that we talked about from the Quality Center, the Department of Labor always has staff, well, it's actually management, senior management from the Department of Labor there. And they always remind us that the reason that they want these audits is because these are people's retirement funds. And so it's very important that, not that, you can, not every plan is audited, obviously, and you're not going to test every single dollar going into every plan, but they feel like it's a good way for these plans to get looked at and make sure that they have good policies and procedures in place to watch over those funds, make sure that they're being taken care of the way that they're supposed to. So all of that really factors into it. And you just may be wondering, so how do I even find an auditor? I mean, okay, I'm going to ask them all these questions, but how do I find an auditor? And I'd suggest a couple of things. First off, check with your finance area, your CFO. If you're listening to this and you work in the benefit area, you work in HR, you work in payroll, and you've just found out about this audit need, I would go check with your finance area and see, you may already have an auditor that does other things and you just may not know about it yet. So I'd check that first, because if they're already in there doing work, if they meet all these criteria we just talked about, that would probably be your best bet. If you don't have such a need, so you don't really have an auditor on staff, you can do a couple of things. You could, again, I would suggest talking to your finance area, because they may have connections with local auditors. If that's the route you want to go, is someone local, someone who can come to your office and kind of walk you through it. They may know of some folks in town that do this, or they may know of a way to get in touch with some. They might belong to a group where there would be auditors. And the other thing, we get people all the time that just Google 401k plan audit. That's how they end up coming to us, because we show up high in the hierarchy when you do that. We do our audits remotely. We don't come to the office of the clients that we're auditing. We have clients all over the country, and we find for the 401k plan audits, it works really well doing them remotely, because a lot of what you're auditing isn't at that location anyways. The assets are in mutual funds that are digitally held. They're not sitting there. It's not like we got to come and count certificates or anything anymore. So most of the information is not there, and what we do need from that location, we can get electronically. So that's how we choose to do the audits. That may work well for you if you don't really want somebody to come to your office. There's a lot of companies they don't have a location anymore. They're like us. They work remotely as well. So that would work in those situations. Or maybe you just don't want to host someone in your office for a set period of time. You want to do the audit over a little bit longer period. You want to have a little bit more flexibility about when you're providing information. Those situations work well for a virtual firm. Situations where it doesn't work is if you are very time constrained, you have to get it done in a certain time period. That could pose a problem. And the biggest thing is if everything's paper, that's going to be a problem, because you're going to have to scan all that paper in for an electronic firm. So I don't recommend, if everything's paper, that you go this route. I don't think that's probably your best option. But so I talk to your finance area. If you have an auditor, you might want to check there. If not, they may be able to find you one. You can always do Google search. You'll see there's a lot of firms that are like us that do them virtually. And the other thing, Karen mentioned this, it's called the AICPA. So if you actually put in AICPA into your Google, you'll get to the website. It's the American Institute of Certified Public Accountants. It's the body that we all belong to if you're actually a licensed CPA. And that's a national organization, covers the entire country. So Google that, and then look for what's called the Employee Benefit Plan Audit Quality Center, EBP AQC. And once you get in there, and anybody can search for what I'm going to talk about next. You don't have to be a CPA. You don't have to be a member of this organization. It's open to the public. But they have a listing of all of the firms that belong to the Quality Center. And so you would know that those firms do these kinds of audits. They wouldn't belong to this organization if they didn't do these kind of audits. And most of them are very open to taking on new work. So look for your state if if you want to have somebody local, or it doesn't matter if you just want to just get anybody. But you can look on there and it'll give you the name of the contact person, and then you can go directly to that person at that firm. And that would be another way to go, and that would help you would answer some of these questions we just went through. You would know that they're a member of this group, and so you wouldn't have to go into depth on that. So that's how I would kind of try to find an auditor to get started. Um, Another question that we always encourage people to ask is how long do you think this audit is going to take? So I'm talking to the prospective auditor, and you want them to let you know how long is it going to take, and what's the timing look like for the audit. As Karen mentioned, some firms may say, sure, I'd be happy to take your audit, but I can only do it at this time frame because I'm already booked up all the rest of the time. Or the audit is for calendar year plans. The first due date for these audits is the end of July. Most record keepers or TPAs will automatically extend that for you until October 15th, but there's no extensions beyond that. So if the auditor says, hey, love to help you, I can get started the end of October, that's great, but already you've missed the timeline. So you want to be careful when, what the timing looks like, when they can do it, how long is it going to take. That's something that you can differentiate audit firms with as well, because somebody says, sure, I'd love to do the audit, it's going to take 3 months, versus somebody that's going to say it's going to take less time, then obviously you're going to use that in your decision making. And also the timing that it's going to work for you, that you don't want to schedule it. Some firms or companies, they're busy at certain times of the year, and so maybe they want to do the audit early, or they want to do it later because they have other things going on. Or you may have a big system project that's coming up, and I've already got all my regular work, plus I got to work on this system project, and so boy, taking on an audit, that's going to be really tough. Just think about that. Especially if you've got somebody that's going to go on maternity leave, or they're going to be out with a
That has
extended vacation or
that has
something.
happened. I've had clients who usually they always do the audit at this time frame, but one year they'll call and say, "Hey, this person's pregnant. Want to get it done before she has her baby." So they move everything up.
or we have to delay
Yes,
it because they're off on maternity
yes,
leave and they
that's
won't be
happened.
back
Yes.
until a certain time. So and then I mentioned this due date. So again, stop and think. It's your first audit, so you don't really know what to expect. We encourage people to try to book it as early as you can, just to give yourself time. And remember, you got those July versus October deadlines. No extension beyond that. So you want to make sure that you're planning that into your timing as well, and with the auditor. So if you sit down and you figure out, well, the only times I can do it is here, and then you talk to the auditor and maybe that's not going to work, then you have to talk to somebody else. So the timing is really important because, as I mentioned, you got that end of July, and then you can go to October 15th. That's fine. That doesn't cost you
Mm-hmm.
anything. That extension is free, and I call it kind of an automatic extension. It's not automatic. You do have to do the actual filing, but they don't pick and choose who they give it to or anything. It is next to automatic. But beyond that, there's no extension. And if you start hitting those DOL letters that I mentioned earlier, we've seen people getting fines of $50,000-$60,000 for 1 year, one plan audit. So it's significant dollars if you're missing these deadlines. So that's why the timing is really crucial for these. Um, I know, Karen, another thing that we always encourage people to talk about is audit procedures. This is a compliance
Mm-hmm.
audit, and people look at it as a commodity. All audit firms are the same, and we all work to the same standards,
Right.
but how you work with the audit firm is going to be different. And you might find a firm that can do your audit and pricing is good. And we're going to come back to pricing in a minute, but timing is good, but they're very difficult to work with. So what are the things that you think we should consider as you're talking to the auditor about their procedures?
Well, first of all, you need to know if the auditor is going to come on site or if they can work remote. If you have a company where you have a work site, someplace, a conference room, a cubicle, someplace where they can actually set up, then that that might not be an issue. However, there are more and more companies where people are working out of their homes. Most people are remote. So maybe having a remote audit in that case would be beneficial for you. And then, maybe it doesn't matter. But, that's one of the things you need to know, because if they come out to your on site, they're going to be there probably for a week at a time. It's just going to be a block of time that they're out there. Whereas remotely, it'll take place over a little bit longer period of time, and there'll be some back and forth. And part of that will be because there's going to be information that they're going to ask for that you're going to need to provide them. And since they're not there, you're going to have to provide it online. Hopefully they have a secure way for you to provide that information, because the kind of information that they're going to need is payroll records. We always ask, because one of the things we have to check is hire dates, birth dates, and those sort of things. So we always ask for I-9s, and that's going to have some information on that you don't want to be easily obtainable to somebody who's, you don't want to email that kind of information. So you want to make sure that they have a way that you can upload the information. So you just want to make sure all of that's secure. And then how do they conduct the audit? Like, what's the process? So for us, our process is that we usually, once we send out the engagement letter and you return it, we assign a staff member to the audit, and they will set up a time to have a scheduling meeting. And that's usually about a half hour, 45 minutes, depending. If you're a new client, I would plan on that would go a little bit longer, to discuss the audit with you, to get some basic information, kind of let you know what's going on, what the process will be. Hopefully, you can have something like that with whatever auditor that you choose, that they'll have you an idea of what the process is, as far as when will you provide the information that's requested, when will the information be requested, once it's requested, how long do I have to provide it to you, especially if you're remote. If they're on site, once they ask the request the information, they're going to want it pretty immediately. If it's remote, maybe they'll give you a list and you have a week to upload all the information that you need.
Mm-hmm. Yeah, you have a little bit more flexibility with someone remote. If you've never had an audit of any kind before, when the auditors come on site, they're going to give you a list ahead of time of, I need these 20 or 30 things, and it'll be pretty specific stuff. And the expectation is when they walk
It
in
needs to be there
that Monday morning or whatever it is, it's going to be all sitting in the conference room on the conference room table ready to go for them. They're not expecting to get there on Monday and then give you
Right.
the list, and then Wednesday you deliver the information.
Right.
It's not to say they can't be flexible, but the expectation is we get in, we get the stuff done, and we get out and we go to another client. So you just lose some flexibility that way. Versus remote.
And then, once they get in and start doing the testing, they may realize that they need additional information, so they're going to ask you to provide that. And at that point, they're on site, and then, unless you want things to keep just lingering, you need to provide that pretty quickly.
Yeah, their expectation is we're here to get this done, and I don't want to say you need to drop everything. It's not like you can't do other work while they're there, because they are going to be working on things in the conference room, but they're going to come, as Karen mentioned, and say, hey, I need this stuff, and they want you to at that point then drop everything and you got to go do that. So it just depends on what your work pattern is like. I mean, maybe that's fine. Maybe you'd rather have them come in, you just dedicate a week and then it's done and you move on. But some people they can't do that. Their commitments just don't allow for that. And so again, you just those are all conversations you need to have with the auditor and make sure there's no misunderstanding, so that you think it's going to work one way and instead it works a different way. And the confidentiality of information is really critical anymore. And even if the auditor is going to come on site, they will still ask you for things to be sent to them ahead of time. So regardless of this on-site versus remote, you want to make sure that the auditor has a mechanism for you to provide the information to them, and vice versa, for the auditor to provide information to you in a confidential way, so that the last thing you want is everybody's social security number gets leaked, and now you've got this breach you got to deal with. So you want to be careful, and you want to make sure that your auditor has good document retention, but also document destruction, so that we're not sitting here with paper. It's electronic, but that there's a process to get rid of it when you don't need it any longer. So
Right.
those are all things you just want to talk to your auditor about, and make sure that you're comfortable with how they're going to handle your information. Um, Last thing I had on the list was
Mm-hmm.
pricing. And we've said this in, I don't know how many, multiple podcasts and blogs and everything else over the years. My experience when people find out they need an audit, a lot of times they're very surprised because they didn't even know that was a potential. Nobody ever told them that if you get big enough, you're going to need an audit of this plan. And it's, as we said, not optional. You have to do it. And they're very
Mm-hmm.
expensive. Audits are not, 50, $60. I mean, you're talking tens of thousands of dollars potentially. So, one of the first things everybody goes to is how much is it going to cost. And while we know cost is important, and obviously you want to find out how much you're going to have to pay for the audit, and that's going to be one of the questions that you want to ask, it's like anything else. You kind of get what you pay for. And the other thing I hear from people is, I just need this audit, that in air quotes. I don't know what it is. I don't care. Just give me the thing and let me move on. They think it's the same for everybody. And the reality is the Department of Labor holds the plan responsible for not only having an audit completed, but having the audit fulfill all the requirements that it needs to for the audit, that all of the different aspects that needed tested were tested, that the audit report includes all the information it's supposed to. There are things called footnote disclosures in the back. So if your auditor gives you a report, it doesn't have any, there's no words, it's just a bunch of numbers. That's not a complete audit, and that will get you in trouble. The DOL will, I mean, they can do things about the auditor, but the basic problem is going to be with you as the plan sponsor, that you didn't get a qualified auditor. Now, I know it's a tough area because you may not know anything about auditing, and if you've never had one before, you may be sitting there saying, well, how in the world would I know if you're qualified or not? I mean, if I asked all those questions and they all came back with good answers, what else can I do? But I would just caution you, if an auditor is, you go and talk to two, three, five or six people, and one comes back with a quote that's half of all the other ones, I would be a little bit suspicious of, why are they, why is their cost so much less? If it was me, I would certainly ask, hey, I went out and I talked to all these people and they're all up in this range and you're way down here. Why is that? Um, Maybe they have a valid reason. Maybe they have a ton of experience and they know what they're doing and they're just trying to get started and they're willing to lose money on your job to get started. That's not your problem. It's not your job to make sure that the auditor makes money. But at the same time, if they're trying to get into something that they really don't know what they're doing, that's one of the ways that'd be a red flag. Um, Now, if you talk to three or four people and they're all pretty much the same price and you want to go with the least one of the bunch, there's probably nothing wrong with
Mm-hmm.
that. But we just encourage people, and I know this sounds like, I'm saying this because we get paid based on obviously what the pricing is, but just be careful. There can be repercussions if the audit doesn't get done, and if it doesn't get done well, if they don't cover everything that they're supposed to, you're the one that's going to pay the penalty for that more than the auditor. Not to say that auditor won't have, some things happen to them, but ultimately that's going to be your responsibility. And it is your fiduciary responsibility to make sure the audit is done and it's done the way that it's supposed to.
Mm-hmm.
So pricing is not everything, consider that in your evaluations, but it shouldn't be the be all end all of your decision. The other thing around pricing, I always try to stress with people two things. How is the audit firm, how do they bill? How do they price? Um, Here we use a fixed fee for all of our engagements. So you'll know upfront how much the audit is going to cost you. And each year subsequent to that, you're going to know before we are engaged to actually do the audit. So you're going to know upfront. It's not an estimate. It's not, well, I think it'll be a range between here and here. It just kind of depends on how long it takes us. We always say, if we're totally inefficient and it takes us double the amount of time that it should to get an audit done, you shouldn't have to pay for that. That should be on us. So we give you what we consider to be a fair price for the work that needs to be done. Um, we do this all year long, so we're very knowledgeable about the requirements and making sure that we meet those. We give you a fair price, and then that's it. And if it just takes us longer, well, that's on us. That's not on you. But not all firms work that way. Some do give an estimate, some give you a range, some will just progress bill. And if it takes them 3 months and they're working on it off and on all those 3 months, that's going to be a pretty hefty bill at the end. And once you're into it, it's very difficult to say, I've had enough of this. I'm going to go get somebody else. You're not going to get that money back either. So you want to be careful as you're talking to them. It isn't just what's your price in a dollar amount, but how do they bill? How do they come up with their price?
Often too,
And then
I
also,
was going to just add, often too, sometimes
no,
if they do a range or a progress bill or an estimate, they might have something else in the engagement letter that'll say something about travel and incidentals. So you want to make sure if you see that you ask about that as well, and how much, because it could be that one firm charges a little more, but they don't have, then you're not going to have to pay for the travel and incidentals, and the other one maybe it's a little less, but when you add that onto it, it's going to end up being more. And if everything else was equal and you're just basically, just looking down to price at that point, you kind of want to make sure that you have everything included when you're considering that.
Yeah, absolutely. I mean, I think a good question, I get asked this all the time. So, what else is there that you're not telling me? What else are you going to bill me for that you didn't include in that? In our case, nothing, but that may not always be true. You also want to ask what are the payment mechanisms? How do I pay this? Is it so much a month? Is it, I can't imagine anybody saying I pay it all at the end, but I suppose that's possible. We offer a couple of different options here, but there's other ways of doing it. But just depending on your company and how your accounts payable function works, you may want to check out, do they have a payment option that works for you? Maybe you don't want to pay it all at once in one lump sum. So, can they accommodate that? Maybe you just want to pay it and get it done. Can they accommodate that? So again, I would ask that question. How does the payment work? How do I do it? And make sure that that's going to work with your company as well. Because that can be important. And when you're getting down to the wire and, you got to get your audit finished so you can get it filed on time. You don't want to be running into, well, I need to mail you a check and it's going to take 2 weeks to get there and I need the report tomorrow. That's going to be a problem. So anyways, be careful with that. Karen, anything else you can think of that we didn't talk about?
I don't think so.
All righty. Well, I can't think of anything either. I'm going to give you my email address again. It's the letter K and then more, MOORE, at Anders with an S, CPA.com. Feel free to shoot me an email if something in this podcast piqued your interest or you have a suggestion for a future podcast. We'd love to hear from you. Otherwise, if you listen to this a month from now and you've just found out you need an audit, feel free to reach out and we'd be happy to have a discussion with you. Thanks for listening and we'll talk to you next month.
Enjoy this podcast? Visit our website at anderscpa.com/401k to get more tips and strategies for achieving 401k audit success. We're here to be a resource with ever-changing rules and regulations.